Welcome to ACCA Wiz. Today we cover performance measurement in not-for-profit organizations and the public sector, how to evaluate success when the goal is public value, not profit. By the end of this session, you will be able to comment on problems with non-quantifiable objectives, explain challenges caused by multiple objectives in not-for-profit and public sector organizations, describe how performance can be measured, and explain value for money in the 3S economy, efficiency, and effectiveness. Not-for-profit and public organizations deliver public benefit, not profit. They are funded mainly through taxes, grants, or donations. Examples include NHS hospitals, local councils, universities, and NGOs. Because there is no single profit metric, we must measure success in other ways. These organizations provide services, not products. Their focus is on achieving social outcomes, not financial returns. There is no investor ownership expecting dividends, and they have strong accountability to taxpayers, donors, trustees, and the public. In commercial businesses, success is measured through profit, return on investment, or earnings per share. In not-for-profit organizations, success is measured by social outcomes and value for money through the 3S. Funding sources differ. Private firms rely on shareholders while not-for-profits depend on public funds and donations. Beneficiaries differ too. Private firms serve owners, while not-for-profits serve society. Let's begin with the problem of non-quantifiable objectives. Goals such as improving health, reducing poverty, or increasing literacy are meaningful but hard to measure. Simply counting activities, like meals served or books distributed, doesn't prove real impact. There are three key difficulties. First, there is no clear benchmark for success. Second, it is difficult to compare performance between periods or across organizations. Third, accountability is weaker, as success cannot be precisely measured. This can encourage managers to focus on short-term visible outcomes instead of meaningful long-term results. To handle non-quantifiable objectives, we use proxy indicators such as satisfaction, participation, and awareness. Qualitative surveys and impact studies can help. We should balance inputs, outputs, and outcomes for a complete evaluation. Take an example of a healthcare service. Its objective is to improve patient well-being. Quantitative measures include waiting times and recovery rates. Qualitative measures include patient satisfaction and empathy of staff. A balanced mix of both reveals true service performance. Performance in not-for-profit organizations is measured at three levels: inputs, outputs, and outcomes. Inputs are resources such as funding, staff time, and facilities. Outputs are services delivered, like patients treated or students taught. Outcomes are the long-term effects, such as reduced illness or higher literacy. Financial and non-financial measures should be used together. Financial indicators include cost per service, budget variance, and utilization of funds. Non-financial measures include quality of service, accessibility, satisfaction, and public trust. Together, they reflect stewardship, accountability, and effectiveness. For example, in a public school system, inputs include teachers, budgets, and facilities. Outputs are students taught and attendance rates. Outcomes include higher literacy and lower dropout rates. This structure links spending to real social value. Stakeholders in not-for-profit organizations have different expectations. Governments care about policy delivery and cost control. Taxpayers want transparency and fair use of funds. Donors expect efficiency and integrity. Employees want stability and growth. Beneficiaries expect accessible and high-quality services. Because funding comes from public sources, accountability and transparency are essential. Organizations must justify spending and demonstrate results. External audits and reviews, such as those by national audit offices, build public confidence and maintain funding. Not-for-profit organizations face the challenge of multiple objectives. They serve many stakeholders with conflicting priorities. For example, a hospital might aim to improve service quality while reducing costs, or a council may try to improve housing and protect green areas while cutting expenditure. Management must prioritize and balance trade-offs. One way to manage multiple objectives is through the balanced scorecard adapted for the public sector. It looks at 4 perspectives: financial, customer, internal processes, and learning and growth. The financial perspective covers budget and resource control. The customer perspective measures satisfaction and accessibility. The internal perspective focuses on efficiency and consistency. The learning and growth perspective focuses on staff development and innovation. This ensures service quality while maintaining financial discipline. Other frameworks also support measurement. The public sector scorecard links stakeholder expectations to outcomes. The logical framework maps how inputs lead to outputs and outcomes. Benchmarking compares performance across agencies to share best practices and identify improvement opportunities. For example, a comparison between 2 councils shows how benchmarking works. Council A recycles 70% of waste at 24 pounds per household, while Council B recycles 55% at 28 pounds per household. Council A clearly performs better in efficiency, cost, and satisfaction. Value for money, or VFM, is a central principle in the public sector. It means achieving the best possible outcomes from available resources. VFM is evaluated through the 3 E's: economy, efficiency, and effectiveness. Economy is about obtaining resources at the lowest suitable cost. Efficiency means producing the maximum output from the inputs available. Effectiveness means achieving the organization's desired goals and outcomes. In practice, consider an NHS hospital. Economy means negotiating better supply prices without compromising quality. Efficiency means optimizing staff and equipment schedules to treat more patients. Effectiveness means improving recovery rates and patient satisfaction. When all 3 E's work together, the organization achieves true value for money. To ensure accountability, public spending is reviewed by independent bodies such as the National Audit Office. These audits assess whether funds are used responsibly, whether objectives are achieved, and how performance can improve. However, measuring performance in not-for-profit organizations isn't easy. Intangible benefits such as community happiness are hard to measure. Long-term outcomes, like better education or improved health, may take years to appear. Political pressures and budget cycles can distort priorities and push organizations towards short-term actions. Let's summarize the chapter. Not-for-profit organizations face problems measuring non-quantifiable and multiple objectives. They overcome these challenges using proxy measures, balanced scorecards, and other frameworks. Value for money is achieved when economy, efficiency, and effectiveness align to deliver public benefit. Performance in the public sector is not about profit, it's about accountability, fairness, and long-term improvement. Success means balancing cost control with service quality and real social impact. Thank you for watching, and I wish you the very best of luck in your exams.